Hey everyone, this is Ryan B with Practical FX Trading. You're tuning into the US dollar Canadian dollar weekly analysis for the week of December 29th, 2019. Hope you're ready for a happy new year with lots of good profitable trading in 2020. I think we're sure to see some fireworks with volatility picking back up in the currency market. So only time will tell. If you want to make sure stay up to date on all of our currency pair analysis, make sure you click on that red subscribe button on the bottom right hand side of your screen. So we're looking at US dollar, Canadian dollar. A lot of big action on the dollar last week. Unexpected, right? It was that low liquidity time when everyone's off for the holidays, but prices indeed moved. So I was just looking, I'm going to go ahead and flash back to this weekly chart. And this is what I was talking about last week, where this giant ascending trend since like 2013 of the dollar over the Canadian dollar. And with last week's price action, we can see that price is now sitting right on top of the 200-week moving average. So this is similar to a lot of the other dollar currency pairs. We see price testing this limit. Now, notable, it has not broken through yet. If we look at these last four lows, right? So the low here in the dollar CAD, low here, our low here in November, and then this low. If this low holds, right, if this average holds and price continues back up, this is still on a proper uptrend. Now, we are at this kind of like breaking point, though, where if price continues to test this $1.30 mark and then close through it, we could see an actual trend reversal. However, it's a really dangerous business to try to guess reversals. You want to you want to go with the trend. The trend is your friend, and you wait for a reversal to prove itself, not just guess, right? And I'd also say that even if you're in the mood to sell, after 6 weeks of hard selling, you're going to want to wait for a bit of a retrace before you jump in, right? You never want to sell the bottom. You never want to buy the top. That's what your brain wants you to do, but you have to train yourself to actually think of the inverse and wait for the pullback. So let's go ahead and look back at this daily, and we see price kind of hanging out right here. The candle closed at about $1.3080. So here's how I play it either way. I can, if I want to be more of a, if I'm a buyer, I want to be more of a risky buyer, I'll go ahead and buy in this around the current price market, right? And I'll put my stop below this $1.3064. However, price could very well hit S1 before shooting back up. Be some good buy orders there. So I might just want to wait and see, right? Wait and see what happens over the next couple of days. If my candles continue to hold in this area, I'm going to wait and see if it breaks out. I'm waiting for a breakout, because here we've got this triangle. If price stays in here and then pops back up, then I'm back on the bull run. However, if price continues here, plops down to weekly S1, then doesn't quickly return. Now, it's okay if price drops down, then shoots back up. That's fine, right? That's okay, cool. We're back in the bull trend. But if I really think it's a bear, I want to see what happens over the next few days. So if I'm a seller, if I'm selling this, once again, I'm going to want to wait for a pullback to at least the pivot point to 3107. If not 3149, before continuing to set, the downtrend continues. We see these moving averages, fast moving average doing a bearish crossover of the medium. However, if we look at this zone, we see a lot of that happens a lot, right? Price has been in this zone for months, back and forth between the $1.3380 and the $1.3080 mark. So those 3 cents, lots of back and forth, and when that happens, when things go sideways, your moving averages do a lot of convergences. So sometimes people use a FX robot that's based on moving averages, and sometimes that can work out really well. However, in times like this, that can really burn you, because by the time the price average crosses over, it's already too late.